Hey guys, what's happening? It's good to be back with you on a Monday night. Excited to be here. We're going to talk about some dividend stocks tonight. I'm looking forward to hearing what's on your mind. Maybe we can research some things. Tonight's just going to be kind of whatever. Whatever you guys want to talk about is what I want to talk about. But I'm going to start it off, I think, with some cool videos. But just want to see what everybody's sipping on. I'm sipping on some unsweet iced tea. Been a long day. I actually went to a class today. I've got a class all week this week. I feel like I'm back in school, but it's a class on church history. So I know that sounds really exciting, but it is pretty cool. It's a pretty cool class. So I'm looking forward to kind of getting through that this week. And with that, let me share something with you before we hit who all is here. Of course, we had Russ on the program last week, so I really didn't have to talk much. I basically just kind of asked Russ a question, and he would take it for 15 or 20 minutes, and then I would. No, I'm just joking. We've been having some fun with Russ on that. So, but anyway, I thought I would share something with you. So I've got some video here. I think you're going to enjoy it. If you like bees, I think you're going to enjoy it. So I was out yesterday. Took the side-by-side, which is I don't know what you guys call it where you are, but it's basically a four-wheel UTV vehicle. And I usually take it around the pasture and look at stuff. I'll look at the bees, the chickens, the grapevines, just whatever. So I'll drive that around, take a look and see what's going on, if I need to do anything. And so I happened to go by a particular hive, and they looked fine to me. So I went to turn and come back the other way. And I looked on the ground, and there was this big wad of bees down there, just on the grass. I was like, man, that's kind of weird. How does that happen? So I was like, well, that must be a swarm. So I'm going to go up and get some goods, another hive, to capture that swarm so that I can increase my hive count. So I did that. I went up, got a hive, came back. And, there was a couple of bees running around, but, not a lot. I was like, where'd those bees go? And then I thought, well, I'm going to look for, I'm just going to look and see what I see. And I was hoping to see the queen. And guess what? I did see the queen. And I'm going to show you guys what that looks like. I think it's this one. Yeah. Okay, so there is the queen bee. If you've never seen that, I've put her in a clip, and she can't get out of there. The other bees can get in there if they want, because it's just the holes are just big enough for her not to be able to get out. She's a hefty gal, so she's got some hips on her with those. Since she is a mated queen, and there she is. So I actually found her, and decided that I was going to put her in the hive. But, you're looking at that grass there, and I just don't see any bees there. And I'm wondering, where are all the bees? So that's the hive I'm going to put her in. So I get the hive out, and I put her in there. I put that whole clip in between two frames of the hive, and I basically set it on like a block. So because I just wanted it to be there near where they were. And lo and behold, those bees started coming out of the grass. It was the freakiest thing I've ever seen. They just were like coming up out of the grass. It was like a horror movie. And so I'll show you a little video of them actually going to her. Let me get rid of that one. Going to the queen. So I had set her in there by herself. All of a sudden, some bees started coming around. And then it was major. Look at that. Those bees coming up out of the grass like that. Can you guys see that? They are coming up the side of that hive. You can see that they're on the ground in front of that hive. There are just bees everywhere. And they are coming to protect their queen. And, if I hadn't seen them balled up on the ground, I would have never seen them. They would have been burrowed. That's my other hive that I came to check. And you can see that there's bees coming in and out of that. It looks fine. So I have no idea where these bees came from. I do know that the queen was a bit tired. And I think she had stopped to take a breather. And so they all just kind of landed and went underneath the grass there after they had landed in the ball. So fortunately, I saw them at the right time, and here's a cool little picture as well. I think you guys will enjoy that. This is that plastic, clear plastic is that clip that she's in, and you can see that they are covering at least 3 frames inside there. So, but it now has this lid. I don't know if you can see that. Maybe not. Yeah, I don't think you guys can see. Maybe you can. But anyway, I put that lid on it and, a top cover. And as far as I know, they're doing fine. So I'm going to let the queen loose here in the next day or so. And hopefully they will stay in this new home that they have. So I thought you guys might enjoy that. I know we talk about bees some, but hey, never hurts to have a little bit of video. I'm going to get rid of these, because we got other stuff to talk about. We're not going to talk about bees today. We're going to talk about stocks. So let's see who all's on the program tonight. We got Brad Durfee. Looks like my buddy Brad came an hour early. I really appreciate that, Brad. You are just Mr. Punctuality. So, I really appreciate you showing up so early and getting the room prepared for me, turning the air down and stuff like that. That's really awesome. So, no, welcome, man. Janice is here. Janice was also on Russ's show last night, so it's good to see you. Billy Johnson, he's here for the honey giveaway. Billy, I have no idea how I would get honey to you halfway around the world. But, I guess we can dream, right? We can dream about that. We got Pat here on the program. Good to see you, buddy. Steve C is here. Russ covered the news last night, so we'll kind of play it by feel, see what's happening. Shannon's here. Good to see you, buddy. So Janice is drinking a chai latte. I know people who love chai. I'm just not a fan. I'm not sure why. It's not that it tastes bad. It's just that it's a little mellow for me. It doesn't taste bad at all. It's just like I just don't, crave it like I would iced tea. But latte sounds really good right now. Shanna's doing Diet Coke. That'll work. Wow, El Dynamico, you're doing some coffee, man. You are brave. You're a couple of hours behind me, maybe 3 hours. So, it's either 5 or 6 o'clock there, your time. So hopefully you don't stay up all night, my friend. Fast Eddie is in the house. So that is awesome. So Janice is asking, how many complete hives do I have? With this one, I now have 8. So I have 8 hives. And I'm probably going to go next year, probably up to like 15. I'm going to try to double what I have. Because, I can pretty much handle probably 15 hives in a day, and I just need to get in the hives maybe once every 7 to 10 days. So if I can do 15 hives in one day, then maybe 2 days a month I'm getting in the beehives. So I think that would be very feasible. The honey crop is really suffering this year, though. We've had a lot of rain in our area. That rain, let me think. I Googled it yesterday. We have on average, it's somewhere around 5 to 5.5 inches in the month of May over the last 30 years. So over the last 30 years, if you average all the rain, it's about 5 to 5.5 inches. In the month of May 2025, we had about 9.5 inches. So we almost had double the normal rainfall. What that does is it comes in and it really washes the nectar out of the flowers. So the flowers have to kind of rejuvenate that nectar, and then it's raining again, and then also the bees can't fly in the rain. So it's kind of a double whammy. You take their ability to fly away, and you take the nectar source away. So it's kind of a big deal. But we're going to see. We're going to leave them and see how they do. I do have honey supers on. There is honey in there. It's just not as much as I thought there was going to be. So, yeah, Steve, I think it's cool too, man. I just love watching that, because it's like, how do they know to do what they do? And then how do I best help them help themselves? I can't make honey. They have to make the honey. So I have to make it so that their environment is the best suited for them. And so it just takes a lot of research, a lot of experience. I read somewhere the other day that being a beekeeper is half MacGyver and half hold my beer. So I thought that was pretty good. Honeybee, actually. Wow, we got a honeybee in the program tonight. I wonder how that happened. So no, it's good to see you, man. Duresh, good evening. Good evening to you, my friend. Sweet or unsweet? For me, it is unsweet tonight. Now, I will say this. I'm not a fan of sweet tea. I think it's too sweet. But most of the time when I go to a restaurant, I will ask for half sweet, half unsweet. And they call it half and half here. So all you have to do is say, I want half and half. And they won't bring you the milk, the half cream, half milk. They will bring you half sweet, half unsweet iced tea. So there you go. So if you're ever in Alabama, ask for half and half and you'll get it. Oh, good, Gary. It's good to see you, man. So I'm glad your wife enjoyed the bee story. I may try to do more of that kind of stuff. Although, we're here to talk about stocks. We're not here to talk about bees, but we are people with multiple talents, right? And so we don't just have to stay on the live stream with just dividend stocks. So Steve, 15 hives a day, 7 days, it's 105 hives. Yeah, that's right. So that's if I wanted to do, and if you went 10 days, you're probably talking 150, right? So if I wanted a full-time job, I would probably shoot for about 150 hives. But at this point, 15 sounds like a reasonable number. And, it allows me to play around with them, but not being overly burdened by it. Yeah, Fast Eddie's unsweetened only. Yeah, I hear you, man. Hey, so what's on your mind? What stocks are you buying? And what are you looking at? Is there anything we need to check on? I'll tell you one thing I'm looking at doing. So let me start it off. I'll start it off. I will, let me share this screen. You would think I would already have that done, huh? No, that would only be if I was organized. Would I do that? Okay. Yeah, Janice says it's a community shareway. It is. That's right. That's one of the things I love about this group is that it is a community. I mean, we are the reason that we pursue dividend investing or even investing in general is to make our lives better in the future. And why do we want to do that? We want to do it because we've got other things that we that we enjoy in life. And so, that's kind of where I'm at too, Janice. All right. Oh, let me make this bigger so that we can see it. There we go. Maybe that's a little better. I'm going to knock this down to just the things that I own because I want to share something with you guys that I'm looking at doing that maybe gets your feedback on that. So I've been buying a stock called Amphenol. It's this line right here. Let me see if I can highlight it. Boom, that one right there. So my model says it's going to be roughly a 16% return. The challenge is that they are about 13% overvalued. The analysts are predicting that they're going to be around 4% loss total return for the year. And, I'm not sure that I really trust the analysts all the time, although, sometimes they're right. And so anyway, I started buying Amphenol. I've got 5% of the portfolio, 5.15% in Amphenol right now. If I go and look at how it's done, I started buying it, I think, in January of this year. It's up 35% since January. So what I'm considering is, and let me, before I say that, let me remind you what my rules are. My rules are that I want to be diversified, so I want to have between 15 and 25 stocks in the portfolio, as well as I want to have a normal weighting for any stock that I have at 2.5%. If I like a stock a lot, like Amphenol, I can ramp it up to 5%, which is kind of where we are. And but at this point, I'm really considering not unloading Amphenol, but dropping it down to my normal weighting. So instead of 5.2%, it would be roughly 2.5, 2.6%, something like that. So what do you guys think? I mean, do you guys know much about Amphenol? It's an electronics company. They I consider them like a Parker Hannifin of the electronics world. They just kind of had a whole lot of different electronic parts that are hard to source. So they bring that to the table. Just with them being overvalued, with the analysts not being super excited. It's not scaring me away from them as a company. I just don't know if I need to be overweight on Amphenol. So I don't know. What do you guys think? Let's see. Nobody thinks anything at this point. Let's see. El Dynamico says he is down 5% on SCHD. So he's loading up on it. Yeah, that's good stuff, man. There's a lot of people that are into SCHD. I don't own any SCHD. It's and kind of if anybody would, it would be me, right? Because it's a higher yield dividend company or ETF. But I don't know. It's but it's such a well diversified ETF, and I like the strategy of it. Because they focus on that dividend 100 index, and they kind of pare that down based on different things, and they reconstitute once a year. So it's certainly a good fund to be in. I just enjoy stock picking too much to go too far into ETFs, but I think loading up on it when it's down is a good strategy, because in 30 years you will be glad that you did. SoFi, sell, hold, or buy? That's a good question. Let's see what we got here. Dun, 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 dun. There we go. Let's check it out. Let's see what the analysts have to say. This is Tip Ranks. The analysts say that it's got about there we go. It took it a minute. It's got about a 10% upside. It's currently trading around 1367. The analysts on average are saying that it's about a $15 stock. If you look at all analysts, they're saying $14. So that's not a whole lot of upside. Let's take a look and see what Simply Safe Dividends has to say about it. SOFI. SoFi Technologies. Maybe it's Sophie. I don't know. SoFi is what I would call it. Let's see. Well, they do not issue a dividend, so it's going to be kind of hard. But let me look at some of the financials. The shares outstanding have really ramped up, so they've diluted, shareholders. But their sales have grown as well. So it must be it's not relatively new. They had stuff in 2017. Let's see. Oh, yeah, their earnings up until 2023 were negative. They 2024 and 2025 look like they are going to be positive. So yeah, I would really want to understand. They don't have any return on invested capital, obviously being negative. I would really want to understand their business, why they are just not. I mean, they're coming out of a hole. It looks like, and I just don't know whether that hole, whether out of there for good, or whether things are just happen to be good right now for them. Although the net debt looks pretty good, around 5% to 15%, somewhere in there. So I would say, well, so for me, because I only invest in dividend companies for various reasons, it would not be a buy for me. Even if I did, I would be, I don't know, I would be a little bit leery of just the volatility, the cyclicality of that business, looks like to me. So hopefully that helps. That and what, $5 gets you a cup of coffee at Starbucks, right? Is it Triven or Triven? Help me out there. I want to pronounce your name properly, so I want to say it's Triven, but correct me if I'm wrong. He's buying Coke, which is a bottler. Since it's split, what do you think about it? You know, I like Coke. I actually owned it at one time. It was very small. It was in a portfolio that I really don't ever talk about. It had like, $100 in it or whatever. So I have had it before. It's been probably a couple of years, but I did like the company. It's called Coca-Cola Consolidated. And, they've got a pretty decent credit rating, BBB plus. And wow, look at that dividend growth. Smoking. Look at that. It went 100% last year. So things are looking up. Look at these payouts are crazy, man. The payout ratio is almost nothing. Shares outstanding are going down. They're buying back shares. Return on invested capital looks fine. Net debt to capital is coming down. Interest coverage ratio is coming down. Not really sure why that would be based on these other numbers, but I think it's looking good. I wouldn't feel bad about owning that. There is no dividend safety rating and simply safe dividends. Let's see what the investors are saying about it. Coke. Looks like they don't have any. They're not covered by the analysts. That's why. So that's not so good. They're down 10% year to date, though. Looks like in May, they were trading around 135, or April 29th. And then, bam, April 30th, they were 119. May 1st, they were 114. May 4th, they were 113, and they are trading right around 113 now. I'm not really sure what caused that drop. It probably had to do with earnings, but I would want to understand that. They're saying that they're a neutral, but everything else looks fine. I mean, if you like the long-term aspects of the company and long-term projections, I wouldn't have any issues with that. See what Morningstar says about they may not even give them, let's see. Yeah, it doesn't look like they cover them. Yeah, it's a Q value. Looks like the fair value, according to Morningstar, is somewhere around 120. But I don't know if I would trust that too much, because it's just a quant rating. So yeah, I mean, I think Coke's not bad. There may be others that are better, but I don't think that's too bad. So Janus, I would think electronics being very competitive. Yeah, it is competitive, and I think their competitive advantage is that they have such an array of products. So very similar to Parker Hannifin. Parker Hannifin does a lot of small parts that have, for aircraft industry, for even the space industry. So they have to be high quality, but they're low cost parts. So the customers like to be able to say to Parker Hannifin, Here's what we need. Here's our bill of ladings for all of these small, insignificant to them, because they're buying, bigger parts. And so Parker Hannifin puts all of that together, and there's a lot of value created by Parker Hannifin for the customers, because they can just handle all that little bitty stuff there, and the companies don't have to deal with it. Very similar with Amphenol. So I think they do provide at least a partial competitive advantage with that. So yeah, but yes, you're right. It is very competitive. So Shannon says return to normal weighting. I think I'm kind of leaning that direction. So that's good advice. How long have I owned it? I started buying it in January, so I've only owned it in like 5 months. So I guess we're coming up on 6 months, but no, I guess it's 5 months. And I've bought, I think, 4 tranches of it. So I bought it 4 different times starting in January. Yes, it's very low yield. That's right. High PE that has shot through the roof. Do you consider it a value stock? I say no, absolutely not. It is not a value stock. I think it is overvalued. So it is definitely not a value stock. It is what I would consider a growth stock, even though it pays a dividend. So I know that there's a lot of people that assume that growth stocks don't pay dividends, but I think there are growth stocks that do pay dividends, and Amphenol is one of those. So, but it has grown significantly, 35% in 5 months. I don't know. So I'm thinking I may return to normal weight on that. Gant, any thoughts on ACN? Is that my friends at Accenture? Yep, that's it. So, yeah, I have some thoughts on Accenture. Of course, the analysts here say there's a 10% upside. Accenture is a consulting firm that specializes in AI. So if you're looking for a way to get involved in AI without buying AI companies, Accenture is a good way to do that. The challenge with Accenture, and I've got them, actually, I watched them. Let me try to find them. Sorry about this. I'm going to Accenture. There it is. Okay, they're on my watch list. I've got them as a hold. I show that they would grow about 15%. The analysts are talking 12% when you add the dividend in. Morningstar has them with a wide moat. Why do they have a wide moat as a consulting firm? It's because of AI. They are trading roughly at their, you guys can't even see this. What am I doing? There we go. Is that better? Sorry about that. So you can see here that I've got Accenture here. This is in my spreadsheet that I use to track my investments as well as potential investments. 15% is what my model says. The analysts are saying 12%. Morningstar's got them with a wide moat. Let me get over here. The percent of fair value is 99%. So they are roughly trading at fair value. Return on invested capital is a very respectable 22%. They have medium uncertainty, dividend score of 92, dividend yield of 1.9%. They also have a buyback yield of 1.5%. So a total shareholder yield of 3.4%. And they're trading at $314 a share. Let me see what their fair value is. Morningstar has them at $318 for fair value. So, I've been keeping my eye on them. They there was a time that they began to trade below their fair value, at enough below that I really began to get interested in them, but they didn't stay down there long enough. So, they popped right back up. So, I like Accenture. I think Gant, you could do worse than Accenture. So I'm just waiting for the right time for them, so we'll just have to see. We'll have to see when that right time is. But if you're buying them, I don't think that's a bad deal, especially if you're dollar cost averaging in. So the way my portfolio works now, since I'm retired, I will, make larger purchases. If I'm going to create a position, I don't create a position unless it's going to be at least 1% of the portfolio. If I were dollar cost averaging in, I wouldn't worry as much about fair value. I would just start buying because as the stock is high and you're buying dollar cost averaging, you're going to buy fewer shares. When the cost is low, you're going to be buying more shares. So over time, you're going to do pretty well on an average cost perspective. So if you are dollar cost averaging in, I don't know that I would be as concerned about as concerned as I am about fair value. I mean, a stock is worth a value. So if it's like crazy, I wouldn't do it, like Costco. But if it's 99% of fair value, that means that you're paying a fair value for that stock, and so you could do much worse, right? You could buy something that is way overvalued. So there you go. Those are my thoughts on Accenture, Gant. Hopefully that's helpful. So my buddy El Dynamico has to go to a commencement ceremony. He says he has a commencement ceremony. Oh, to go to. So he has to leave early. Have a great week. Have a great week, man. I hope the ceremony goes well. And it's good to have you on the program, buddy, all the way from Sacramento. Oh, Jim Betts is in the house. Hey, belated happy birthday. I did actually wish you a happy birthday on your birthday. I just get lucky because Jim friended me, I think, on Facebook, and Facebook told me it was his birthday. So I said, happy birthday, Jim. So that's great. Thoughts on GSL? I think that is... Before I think too much, let me just pull it up and see. GSL. Yeah. Oh, no, I was wrong. Global Ship Lease. I can already tell I'm probably not going to be too interested in this. Okay, let me show you guys what I'm looking at. It says variable dividend with an ugly dividend history, but it looks like the company has breathed new life into dividend consistency in the last couple of years. Let's take a look. Let's see what's going on with it. So this is called Global Ship Lease, GSL. They have no analysts following them. Oh, I lied. Sorry. They don't have any top analysts following them. There are 2 analysts who are following them, giving them an average price target of $28, currently trading around $25. So about a 10-11% upside from the analysts. Let's see what Simply Safe says. GSL. Yeah, they've got a 40 Simply Safe dividend, unsafe dividend rating. Says it appears speculative. Although, I mean, I say that doesn't completely mean that it is, because I actually own a stock, Hess Petroleum or Hess Midstream, that is also rated a 40, but based on the work that I've done, I'm comfortable with why they are rating them as a 40. So I have not done that work on Global Ship Lease, though. It is a triple, the credit rating's BB+, so they are definitely junk status. So that would concern me a little bit. Payout ratio is pretty low, though. So, but yeah, I see what you mean here about the ugliness of the dividend. They paid one in 2008. They didn't pay it again until 2015. Then they didn't pay it again until 2021. And now they have consistently begun paying and growing that dividend. They've paid it for the last 3 years. They are on a 1-year growth streak. So that one of my rules is that I have to have a 5-year growth streak. So so this is something that I wouldn't entertain, although they do have these special payouts, so that looks pretty cool. Looks like those are growing even. It's almost, well, it is double what it has been in the past. So that's not too bad. Earnings payout ratio, again, looks really good. Shares outstanding, pretty flat. Total sales, 700. They've been growing pretty rapidly. They got a decent return on invested capital, so that looks good. Yeah, net debt to capital looks really good. Interest coverage ratio looks good. So, I don't know. I don't know why they're rated a double B plus, but that would be, and that's from the credit rating agencies who maybe I should share that. Here's a little fun fact for you if you are not aware of this. So stock analysts don't have access to company financial statements other than what's released to the public. So they can meet with management, they can talk to management about what their growth plans are, but they do not have access to the financial records. However, rating agencies, the one who give, like Moody's, S&P, I forget the third one. There's a third one. But they will actually, they can be treated as company insiders, which means that they, sign, they can't invest in the company, et cetera, et cetera. So they can actually see the forecasts of the company, the financials of the company. So when a credit rating agency says it's double B plus, they're not doing it necessarily from the outside. They're, they're not doing it from the outside. They are doing it from more of an insider perspective. So there is something that they see inside that. So let me just kind of give a different example here. So Simply Safe Dividends says they are rated as a 40, unsafe. Simply Safe Dividends does not have access to the financials or the forecasts of the company. They only know what the company reports to the public in its SEC filings and its any kind of press releases that it does. That's all it gets. However, S&P, the Standard & Poor's, as well as Moody's, and it was almost on the tip of my tongue. If anybody remembers who that third rating agency, I'd appreciate it. They will actually be able to see that information and give a credit rating based on insider type information. So I put a lot of weight on the credit rating. So I don't know if you guys knew that or not. Hopefully that's helpful. So yeah, GSL, I wouldn't get into them too much, mainly because of the credit rating. But if you think they're coming out of the hole and they've got a bright future ahead, who am I to say that's a bad deal? All right, John J. Let's see what you got going on, John. There we go. Your game plan for your portfolio going into the second half 2025 and beyond. My game plan is not really to change my game plan. Over the past year, John, I have set this my model up, and I am really liking what I see. It's not always correct, but it is correct more often than it's wrong. And again, it's just hard to predict things. I mean, if everything was predictable, then we wouldn't have any attempt at gaining in the stock market, right? We'd all just invest in what's going to go up because we could predict it. So, but this model is actually doing pretty well for me. It's one that shows me that I probably need to back Amphenol down. I wish I had listened to it, the model. I wish I had listened to it about 2 months ago, because it would have whispered in my ear to back down on United Healthcare, just like it's whispering in my ear now about backing down on Amphenol. So, I learned that lesson with United Healthcare. So I am going to, I'm going to continue down that road. I'm going to continue to weekly update my spreadsheet. I have 100 stocks that I track. And again, I only want 15 to 25 in the portfolio. But, I'm always looking for something to add to the watch list. Doesn't take me terribly long to update this on a weekly basis. And, it kind of gives me something to do on the weekend if I'm not out finding bees or something. So, speaking of that, let's do this really quick. Let's see if I can find it. Okay. I'm going to make it bigger. And then share it. Now let me get John J. hidden here. All right. So let's do this. Yeah, it's not going to let me. Okay, so this is the year-to-date portfolio value percentage change. So this is the weekly percentage change of my portfolio on a year-to-date basis for every week of the year so far. The green line is my portfolio. You can see I started out the year roughly in the middle of the pack. Even in, where was this? This is, back in mid-February, I was almost the bottom of the pack. The Russell 2000 was just a little bit below me in return. But, and then all of a sudden, bam, we are leading the pack and have been since I guess we went in the lead here, March 14th. We've been leading the pack, got pretty close here and here, but we are still leading the pack here on May the 30th. I'm not one that thinks that it's going to lead the pack all the time because it is set up to reduce my volatility. So if you can see here, the blue line, which is the Russell 2000, is highly volatile. The green line, which is my portfolio, has a much less volatile number to it. So I like having less volatility, and we're still doing well for the year. So at the end of May the 30th, we were up 1.06%, which is, as we say down in the South, it is better than a sharp stick in the eye. Better be up one than down one, right? So there we go. So I thought that would be kind of fun to see. Is there anything else that would be fun? I don't think so. All right, so we'll stop sharing that. Oh, let's see. Oh, you're never late, John. You're always on time, man. Let me check out LYB. I think that's it's not a stock that I invest in. I do know that. Let me go ahead and get this back over here. I think it's that Lyondell Basel, or however you say it, LYB. Lyondell, I always say Basel, but I think it's Basel. We looked at this last week, I think, but the it's got a credit rating of BBB, which is two steps above junk status, which is not a terrible place to be. Got a dividend yield of 10%. Let's take a look at their share price and let's see how they've done. Usually when I see a high dividend yield like that, I wonder how they have done in the stock price. Yeah, see, they're down 25% year to date. Let's take a look at the 5-year. 5-year, they're down about 20%. I don't know, man. It's I don't know much about them. What do they do? It's a global chemical company. It produces plastics, chemicals, and fuels used in a wide range of consumer and industrial products. I don't know, man. So I could get 10% a year, right, in dividends, but then here, let me make this bigger. Oops, not that. Let me make this bigger. Look at that 1 year. 1 year's down 40%. So I could get a 10% dividend and still be down 30% on this stock. 5 year, so 5 years at 10. I would be up their total return, but man, I would want something that's going to grow rather than deteriorate. It's a little bit of a challenge, I think. It would be a challenge for me, John. It's just not the right stock for me. SCHD stands. Good to have you, man. Also known as Leroy Skywalker. Sorry if I missed it, but what's the minimum credit rating you're looking for? That's a great question. So the minimum credit rating is, for me, would be a triple B minus. Triple B minus would be one step above junk status. So once it gets to double B plus, it is junk status. So I tend not to want to invest in non-investment grade credit ratings, which is double B plus and lower. So when you get to triple B is better than double B. So triple B minus and all the way up to triple A would be investment grade companies. So I would say the minimum would be triple B minus. So, but that's me. I mean, what about you guys? Do you guys even care about the credit rating? Do you look at it? Just let me know your thoughts on that. Rust Moments has arrived. Yeah, man, you are up even better than I am on Amphenol. That's fantastic, man. He's up 50%. He jumped on the Amphenol party after I had already bought some initial shares, and I bought some in January, and then I bought some, throughout the year here, and that is fantastic. I am happy for you. That is so good. Hey, you're never late, man. You're never late. Yeah, there you go, Jim. He says, thanks for the birthday wishes. 69 trips around the sun. If I would have known I'd lived this long, I would have taken better care of myself. Man, isn't that the truth? It is, I will be 60 this year. Can you believe that? I will be 60 years old this year. And, I retired early, and one of the things that I noticed about myself is that I could sit around and do nothing and enjoy it, and just decided I needed to do other things. So there you go. So happy birthday again, man. That's good stuff. Let's see. Yeah, this is a good question. Maybe Jim will answer this. Jim, at what age did you retire? So I retired. I'm not Jim, but I retired at 59 and a half. So I am 59 and a half. I retired at 55 and a half. I am now 59 and a half. So I've been retired, believe it or not, for 4 years. That doesn't seem possible. So, and you know what's cool is that I've been retired for 4 years, and my net worth is higher than it was when I retired. So what that means is we're managing our money well, we are growing our net worth, and we're being good stewards of what we have. And I think that's what it's all about. Let's see here. SCH, this is Rust. SCHD is a good ETF with a good 4% yield, but it won't outperform the S&P 500. I think that's true. I think that's right. It's really hard, in my opinion, to outperform the S&P 500. My portfolio has done that over the past 4 years because I do track that on an annual basis. And then, so for the last 3 years, it has, plus I'm outperforming year to date. So it has to actually be outperforming, but it could turn tomorrow, right? I mean, it's, I don't have a lot of tech in my portfolio, and the S&P 500 does. So if there's a big tech move, boom, guess what? It's beating me. But I enjoy doing what I do. So you got that. So Jim initiated a position in GSL. That's a global shipping lease, I think is what that was. Seeking Alpha gives us a strong buy in quant and buy ratings from the analysts. 4-star quant ratings from Morningstar. It's definitely speculative. Yeah, I think that's right. And there's a place for that in our portfolios. You know, I wouldn't do a lot of it because I don't think, especially at our age, Jim, I don't think we want to put the portfolio at risk. But to throw a position at something that we think is really going to recover a lot, you know, if it doesn't and it stays the same, we're not hurt. If it does, it's a good deal. If it goes down, it's a small percentage of portfolio. That, you know, so I think that's a great idea. Russ says GSL looks so solid. They haven't lost net income in any quarter since 2019, unlike all their peers. So that, yeah, that's something to look at as well. Oh, yeah, that's a good question, Steve. If you don't have Simply Safe dividends, where can you see the credit rating? If my memory is correct, the company will put the credit ratings for any agencies that issue a credit rating for the company. Sometimes there's one, sometimes there's two, and sometimes all three companies will do it. And they will put that in their 10K. So it would be the annual SEC filing that the company does. So it's called the 10-K, not the 10Q. That's a quarterly report. They don't put it in there, but I'm pretty sure that they put it in the 10K. So if you want to find it, you know, just, and it'll be in the same place. I don't know if you've ever taken a look at that, but the 10K is organized for every company. It's governed by the SEC, so it's kind of laid out the same way for every company. Sometimes the companies interpret things a little differently, but it's overall in the same format. So you can just you know, pull it down, do a search on credit rating, and find it. So that's what I would do if I didn't get it off Simply Safe Dividends. Hey, thanks, Rust. Yeah, hit that like button. Join my Discord. Yeah, we have some fun in there, and it's only as fun as those participating in it. So if you're not participating in the Discord, it is free to join. Just click the link in the bottom of this video. Love to have you in there and participate, because it's usually when somebody has a question or something that it really kind of begins to be a lot of fun. So Jim went part-time at 63, retired fully at 64. Fantastic. So you've been retired for 5 years now. So we retired roughly at the same time. You must have retired in 2020. I retired in 2021. So fantastic, man. The GSL is a double B with very low safety rating on dividends. Yeah, that's right. I agree. Oh, yeah. So Rust is saying the same thing. 10K, use Control F for credit rating. I think it needs T in there, but that's okay, man. It's all good. So, hey, what else is on your mind this week? I don't think there's anything. Now, I am considering eliminating a stock from the portfolio, and it's really because I just want to do something else with it. I'm looking to let me see what I'm looking to do here. I may even show it to you guys. Stock listing. And I know you can't see it yet, but I just want to get it to where it actually has some meaning for you. I'm going to get rid of the holds. There we go. This will be more fun. Oops. There we go. All right, so my buy ratings have reduced. There's only 5 companies now that I have with buy ratings. And ConocoPhillips is one. Now, ConocoPhillips had a good day today, if my memory is correct. Let's see, where is it? Yeah, they were at 1.6%. As Midstream's up about 1.6%. Now, Alphabet, Google, and Carlyle, CSL, both of those were down significantly. So, and then Northrop Grumman, you know, I've been threatening to buy some Northrop Grumman, and that's getting closer and closer to a reality. So what I want to do, I do have some cash. Let's go to my portfolio here. I've got about 68. Here, let me make that bigger so you can see it. Got about 68 grand in cash, 68, 69. And so I could use that. But I also am looking to maybe get rid of WEC Energy. I'm up about 29% on it. I'm thinking that with interest rates possibly coming back down, depending on what you believe about the economy, that, you know, it could actually help the company. And then you got all this AI and all that stuff. But I think some of that is already priced in. So I know it's Wisconsin Electric, but I've sold off most of my utilities. You remember I had a lot of, what was that one out in Arizona, APS Energy, but it's Pinnacle West. I made a lot of money on Pinnacle West, got rid of them. So I'm kind of thinking maybe WEC Energy might be on the chopping block. See if there's anything else. Oh, and I may trim Parker Hannifin a little bit. It's 3.2%. It's not a huge deal, but I may get it back down to that 2.5% range. I may trim Microsoft as well. It's up 42%, but you know, it's 6.4% of the portfolio. That's much higher than what I typically want. And it's just because it's grown so much. And I had, you know, it was at 5% and then it just grew so much. And so it is what it is. But I may trim that back some as well. But I don't want to do that unless I've got a place for it, right? And then I want to send it somewhere. And then we talked about maybe trimming back Amphenol. So, but if I do that, what am I going to do with it? And I may buy into more Carlisle and then start a position in Northrop Grumman. I'm not sure I'll buy more Hess Midstream. They're about 3.5% of the portfolio already. Google's already at 5%. ConocoPhillips might be time for me to add a little bit more to them. Go ahead and average down, because what are they at now? ConocoPhillips, I'm down 11% on them, but they're 2.2% of the portfolio. I think they are, let's see what the stock listing says here. They are 22% undervalued, according to Morningstar. So I'm thinking I want to go ahead and maybe bump up ConocoPhillips a little bit, invest more into Carlisle, and invest more into or begin an investment in Northrop Grumman. That's kind of where my head's at. I don't know what you guys think about that. Let's see. SFM, I don't know what that is. Huge margin expansion. Let me check that out. SFM. Sprouts Farmers. What kind of farming are they into? SFM. Fresh, natural, and organic food products in the U.S. I'll go ahead and show you guys this as well. The company offers perishable product categories: produce, meat and meat alternatives, seafood, deli, bakery, floral, and dairy alternatives. Non-perishable categories: grocery, vitamins, supplements, bulk items, frozen foods, beer and wine, natural health. They just sound like they got a lot of stuff going on. So you say there's some margin expansion going on. Yeah, they got a pretty decent return on investment of invested capital now. Net debt to capital still a little bit, it's in a reasonable range, but it's about half capital or half debt, half equity. But the interest coverage ratio is smoking. It is like 155. So that's fantastic. Yeah, I don't see anything wrong with them at all. They don't pay a dividend, so it wouldn't be something that I'm interested in. But if they're growing, they got margin expansion, it might be worthwhile, man. That's good stuff. Yeah, there's that Constellation CEG. Check it out, CEG. I think you've been buying that for a while, right? CEG, yeah, Constellation Energy. Dividend safety is a 60, which is borderline safe. The growth looks good. Triple B plus, which is a good credit rating. And man, look at that dividend. That dividend is smoking. It's good stuff. 2-year dividend streak, 2-year dividend growth streak. So could be overvalued, they say. Yeah, that's let's see. Is CEG, I guess I should have read your comment. I just read the first piece of it. Is the best unregulated utility. They produce more than NEE. They are the largest energy producer in the US. Yeah, just FYI, and you probably know this, but NEE is not an unregulated utility. NEE is a regulated utility with some, what do you call that? Solar and I forget the term for all that, but solar and wind on the side. So, but yeah, they own NEE owns like Florida Power and Light and stuff like that. But yeah, so CEG, it's these unregulated utilities are heavily exposed to the price market. And as long as the economy is doing well and the economy is growing, we increase our power usage when the economy grows. When the economy slows down, the power usage slows down, which means companies like Constellation are exposed to that market. That's okay. It's just, what do you call that? A cyclical type of business. And so, if that's what you're looking for, and then they're a decent company to be in. Yeah, that's not spam, man. We're just talking about this kind of stuff. Why are you thinking sad about your UNH? What if it roars back much higher than you sold it? Yeah, no, I mean that's with anything though. It's like, what if, right? So back in the day, my mom used to say, what if a frog had wings? It wouldn't bump its butt every time it hit the ground. So, I get what you're saying. I mean, it's just got a lot of uncertainty right now. If I had followed the model, it would have told me that it was overvalued and it was time. And it's not that I would have gotten out of it. It's that I would have scaled it back to a normal rating and not had been so much of the portfolio. I think it was up to 5% at one point, and now it's down to 3.8%. So, I would have just, it's not that I would have not been exposed to UNH. I would have better managed the position, if that makes sense. So I'm not sad about UNH. I think it's ultimately going to be a good company. I just should have listened to the model more. But it's relatively new, so can't beat myself up too much, but I do want to learn as I go. So Russ says you might be 3 beers deep right now. APH is doing so good from a huge NVIDIA order of copper cables. Oh, that's good. I didn't know that. That's good to know. That is great. The Rest microphone picked up your talk. The Rest microphone. I don't know what that is. There's something wrong with the mic. Their new NVIDIA Link product uses 2 miles of copper cable. That is great. 3M has gained most losses and back. Oh, yeah. I haven't looked at 3M in forever. Let's take a look at them really quick. Just because it's fun. MMM. Yeah, I have not looked at 3M in forever. They're down over a 5-year period by 8%. They're up on a 3-year period by 1.6%. Yeah, look at that. Over the last year, they are up 49%. 9%. Year to date, they're up 16%. So, 13 down 3 months. So yeah, I just still, of course, who wouldn't have wanted that 50% growth right over the last year? I would certainly have enjoyed that. I would not have turned that down. I just don't know that I like 3M's business model and their strategy. I think they got some great products, but I don't think that they're growing those products and increasing the products like I would like to see them. So, but if you own them, I don't, that's not my call. It's grocery store, super popular over here. Where's over here, Rust? Where are you at, man? I don't even know where you reside. When you say over here, does that mean that you're overseas somewhere, or in the U.S., or over here in California? Where you at? If you don't mind sharing. I mean, I'm not trying to stalk you or anything. I just don't know what over here means. Let's see. Still, here, let me get rid of that. Too much going on that screen. Sure, still lower credit rating and dividend safety concerns, however, very, I'm not sure what that means, very 8 Morovid. So I think I probably agree with you. I just don't remember what we were talking about. So, oh, great. You're in Georgia. That's fantastic, man. I probably drive by your house from time to time as I'm going to the beach or over to South Carolina to visit family. So that's fantastic. Sometime when I'm coming through, maybe I'll hit you up and we will go get some coffee or something. That'd be kind of cool. All right, guys. Well, we're an hour and 6 minutes into the program, and this time has flown by. So I am, I'm really kind of sad that it's over, but my voice is kind of gone. So I'm going to need to rock and roll. I appreciate you guys joining. And again, as Rust Moments said, like the video, join the Discord, and hey, I look forward to seeing you guys again next Monday night. We'll have some visitors here next week, but I'm pretty sure I can break away for the live stream. So I'm looking forward to that. And with that, I will see you guys on the next one.